We are 2 minutes away from the end of the trading day. Romaine Bostick and Alix Steel taking you through the closing bell. A global simulcast up ahead here of today's market moves with Scarlet Fu here in the TV studio, Carol Massar and Tim Stenovec in the radio booth as we welcome our audiences across all of our Bloomberg platforms. Carol Massar here on a somewhat sleepy Friday afternoon.
I know. I'm calling it a meh Friday, right, in terms of the market trade. But we've had quite the week. Meh? It's a thing.
Okay. Technical term, I believe.
I mean, what? We've had record runs on the equity side of things up to today. Maybe on the NASDAQ we might see it again. But we've also seen a big rates coming down. We had consumer sentiment, some weakness again today, pushing pressure on yields even lower. So, yeah. We're taking a breather ahead of the weekend.
It was interesting to see the narrative kind of emerge overnight about concern about what's happening in France, geopolitical concerns in Europe with those parliamentary elections. But it does seem investors are a little on edge, but still today's move's kind of muted.
I wouldn't say that they're on edge, given that the S&P 500 is pretty much still holding at its record high. In fact, if anything, I'm kind of impressed with how resilient it is, given a lot of the headlines and the talk about all this uncertainty. You still have everything kind of valued where they were when everyone was excited.
It definitely feels it's more truncated, right? Like the CAC 40, to Tim's point, erased gains for the year. It got hit pretty hard, but that's very much somewhat concentrated on that level. What did participate, though, is the buying into the Treasury curve, right? Like that's your safe haven. That's what you're getting.
Yeah, obviously you saw the strength there in treasuries with yields dropping here, strength in the dollar here. The VIX elevated slightly, but still below that 13 level. And as Carol Massar was just alluding to, equities taking a little bit of a breather after hitting record highs, at least for the S&P and NASDAQ in the first 4 trading days of the week. Looks like we're going to get a little bit of a pullback, at least on the S&P. Right now, the S&P 500 is down about 1 point. Now, it takes a while for these numbers to settle, but that would basically make it unchanged on the day. Keep an eye on the screen because that could flip at any second. The Dow Jones Industrial Average will definitely close lower here on the day, down about 0.1% here on the day, though the NASDAQ Composite holding into the green here. You got a nice bid today on the back of some of those tech stocks, up 0.1%. The NASDAQ 100 up 0.4%. But the big laggards on the day were in the industrial and cyclical space. Transport's down 1%. The Russell 2000 down 1.6.
Like I said, meh, at least on the equity side of things. All right, let's get to some of the individual. Actually, we're going to talk about the S&P 500. You will see in terms of the tone, guys, most of the names lower in today's session. 370 to the downside. Scarlet 131 actually gaining some ground.
All right, and of course, Romaine mentioned the industrials. They are the leading laggards here in the S&P 500, down more than 1%. You have materials and energy, so the commodity-linked names also on the weak side, losing 0.8 and 0.9%. The green slices of that pie: communication services, tech, and consumer staples. Although consumer staples basically unchanged, so we're really talking about tech and communication services.
Really random, but I would love a slice of pie right now. All right, let's get to Adobe. I'm kind of hungry.
It would help you not be meh.
No, exactly. All right, Adobe, certainly an outperformer in today's session. Number one gainer in the S&P 500 and the NASDAQ 100, finishing just off its highs, guys, but just below a 15% gain in today's session, up the most since March of 2020. The company, we know the deal, right? We were breaking it down last night. Strong future sales for its creative products, suggesting customers are adopting the company's new AI-based tools. So pretty exciting. Investors moving into that way in a big way. Let's get to Netflix, an outperformer, up about 2.5% in today's session, highest since about November of 2021. It is up now about 40% year to date. KeyBank Capital Markets out with a report saying his firm's latest media survey showed increasing usage of the Netflix service by its members, always important. Reiterated his overweight or buy on the stock, upped his price target to $707 a share from $705. So a slight tweaking, if you will. Stock closing at about 669 and change
today.
Can I say,
you know what we've noticed at home? That anytime we log into Netflix now, we pay the higher tier to not get the ads, but every time we log in, they give us a pop-up asking if we want to go down to the ad tier.
Really?
Yeah, which I think is interesting. So
that is really weird.
I don't know why they're trying to push us there. Maybe it's more economical.
Because they probably want to show that their ads are worthy of something. That people are actually watching the ads.
They want to show growth in that category.
Yeah.
Oh, okay. Right.
That's funny.
It's a move, yeah.
Great question. Nice little conversation there. All right, let's get to Hasbro. Sorry.
Is she being facetious?
I'm still looking at.
No,
Has she started drinking early, Tim?
I don't know what's going on.
Oh, that were the case. Hasbro up about 6% in today's session. Number two gainer in the S&P 500. B of A analysts coming out raising the recommendation on the toy company to buy from neutral. So this one certainly an outperformer. All right. over to Mr. Stenovec.
I want more gainers, Carol.
Nope, I'm done.
Okay. All right. Do you want to start with shares of Apple?
It's a 3-gainer type
Worth
of
checking
day.
in on what happened this week, okay? Down by 0.8% today. But the reason I'm talking about it is because there was a bit of news from the European Commission that they plan to, well, it's from Financial Times, I should say. The European Commission plans to allege that Apple stifles competition on its mobile app store, citing 3 people with close knowledge of the investigation. The thing about Apple is the moves from the post that article were not actually big. They were pretty muted. So nothing big to report there. The bigger move with Apple is what happened this week. Shares up around 8% so far this week after the WWDC conference on Monday, where Apple unveiled that new the new AI features for its new operating system. Apple shares up close to 30% from their April lows. So it's been quite a big rebound in a very short period of time. Do you want to talk RH, the company formerly known as Restoration Hardware, having its worst single day going back 4 years to 2020, down 17%. Shares plunged after the company reported a heavier than expected first quarter loss. Said first quarter adjusted loss per share was 40 cents. Estimates were for 9.2 cents per share. The guidance for its adjusted operating margin also came in quite a bit below estimates. Price targets at Wedbush, Bank of America as well. And then the cruise operators in the S&P 500, Norwegian and Carnival Cruise were at the bottom. It was interesting. There was just a note out from Bank of America today that said that recent data showed modestly softer pricing. Andrew Dodora over at B of A wrote a note that cruise prices in early June were modestly softer in ocean markets relative to early May. It's why we saw a sell-off. Carnival down 7%, Norwegian down 7.5%. Truist said that potential restrictions on islands in Greece could be an issue, but also said that the stock sell-off seemed excessive. But this was surprising to me that note would prompt a sell-off like this.
But you know what outperformed? Alaskan Cruise. The pricing for Alaskan Cruise actually continued to outperform. So they're going, it's just being a little bit more
That's an older
discerning.
cohort, though. That's the ones who go on the Alaska Cruise, right?
Who have the money to do this stuff.
And the time.
and the time to do that. All right, let's get to the bond market here, guys, because we did see a lot of buying come in pretty much across the curve. You could say some of it's going to be Fed-related. Some of it will be safe haven as flows from Europe and sort of the anxiety there. But yields were down about 22 basis points on the week. That's a pretty chunky move there, guys, on the 10-year.
Yeah,
massive.
Pretty impressive. All right, let's get to something that's really important. I'm not sure it was discussed at the Fed meeting. Probably not. But shorts at the office, yes? Show of hands.
Jay Powell wearing shorts at the office.
Like wearing them? Like wearing shorts at the office?
Shorts. Go anywhere you want. Shorts, yes or no?
What stock are we shorting? I'm confused.
No,
Nice,
I'm
Romaine.
talking about,
Always brings it
Bermuda,
back.
cargo, those kind of shorts. Apparently, if you're on the West Coast, it's kind of normal, but if you're here in the Northeast.
They also wear hoodies.
Can I just say, I don't want to put Tim on blast here, but every day.
I'm ready.
Do I have to turn this car around?
Every day I see Tim walking around in his shorts.
I know.
So Tim, you should have raised your hand there.
Yeah.
Okay, but to be fair, he changes. He bikes in and then he changes.
No,
I got you, Tim.
That's
guys
the context I
Hand
need,
the camera
Alex.
down.
Thank
I
you.
want to know.
The reason we're talking about this is because one of the most read stories on the terminal today is from Sarah Green Carmichael. She's the Bloomberg opinion contributor. She writes about workplaces. She writes about work culture. And she talks about the changing idea of what is acceptable and what's not acceptable at the office. And I got to tell you guys, some people saying shorts are okay.
No. Oh, if you work in the gym, yeah.
Or if you work at home, you can wear shorts.
Or at home, right.
And that's what we saw throughout the pandemic.
Exactly.
In fact, there's another great story this week that Wells Fargo, I mean, this part isn't great, but it fired more than a dozen employees last month after investigating claims that they were faking work. There are allegations of simulation of keyboard activity. So here's where life imitates art, because in The Simpsons, in season 7, there was an episode where Homer gains a ton of weight so he can qualify for disability status and work from home status. And he uses a drinking bird to tap the Y key on his keyboard because he's a nuclear power inspector, and that's what he needed to do, just tap Y. He also used the end of a broomstick to do the same thing while watching television. Again, he gained a lot of weight, so he was wearing a muumuu and sitting on the couch watching TV.
Okay, guys, for context, Scarlett has been working on this for like 24 hours, okay? Because when the story came out yesterday, she's like, guys, we got to do it. She found the graphic, she found the GIF, she made it all happen.
The Simpsons again.
I was joking with her before the show. I was like, you spent all day on this, haven't you? She's like, totally.
Did.
What I love about this too, and by the way, great video there, is just how more sophisticated it's got. I mean, Wells Fargo didn't say exactly what they're using, but I've seen these devices. You can buy them on Amazon or anywhere else
Not
now.
the drinking
so
bird.
it's more sophisticated. So you can just log into your Zoom or your Microsoft Teams or whatever, and it makes you look like you're just staring at the screen, working away.
But the drinking bird.
We got
Mouse
you. We got
movers.
you. I got you. We just
my
need one for the mouse. So they can
goodness.
hit the mouse. Hit the mouse. There
All right.
you go.
No shorts and no mouse movers. That's, I guess, the bottom line. All right, guys, have a great weekend, a safe weekend. Enjoy. That will do it for our cross-platform coverage. Radio, TV, YouTube, Bloomberg Originals. It is the closing bell. We will see you all on Monday.